Hi, I am Dr. Robert Dillon, the technical chart analyst for one of the most profitable market timing services on the internet today, which is stockmarkettiming.com. We provide expert analysis in timing the stock market and have members from all over the globe. Our members consist of individual traders and investors, market professionals like money managers, stockbrokers, mutual fund managers, anyone who is looking for a solid return on their capital. In this video, I will cover a few topics to explain our services. What is stockmarkettiming.com? What members will receive? How our signals are derived? Our methodology? Our outstanding track record? And how to join. What is stockmarkettiming.com? Stockmarkettiming.com is a leading financial service for investors and traders who would like to increase their portfolios in the most non-stressful and effective way possible in both bullish and bearish markets. We have developed a market timing system that has the best long-term track record for trading the popular exchange-traded funds, DIA, SPY, and QQQ. Our number one goal has always been to produce results that consistently outperform the buy and hold strategy of investing. We provide exact entry and exit trading signals for when to go long, sell short, or hold cash. This slide describes what members will receive. We provide exact entry and exit trading signals for when to buy, sell short, or hold cash for the popular broad market indexes, which are the Dow Jones Industrials, the S&P 500, and the NASDAQ Composite. These indexes are traded using exchange-traded funds DIA, SPY, and QQQ, which replicate the broad market indexes. The trading signals are delivered to your email and or as a text. We issue about 20 trading signals a year. Members will also receive S&T's weekly newsletter. The newsletter contains a broad market overview detailing mostly the S&P 500 index and our short, intermediate, and long-term analysis of the market. In addition, we cover the individual ETFs, DIA, SPY, and QQQ. Now to discuss how our signals are derived. Our proprietary methodology focuses on a combination of interpretive, which is based on technical analysis, and our mechanical system. Interpretation uses our skills of traditional technical analysis. Technical elements may include trend analysis, pattern recognition, Elliott wave analysis, Fibonacci retracement levels, key support and resistance levels, interpretation of the key technical indicators, market sentiment data, or whatever else is helpful in interpreting the stock market. Our mechanical system was developed in September 2012 to help validate our interpretation. The mechanical system combines trend following and momentum to identify tradable impulses. This method uses what we call reactive technical analysis. Instead of trying to 100% forecast or predict the market's direction based on past market data, as an interpretive technical analysis, reactive technical analysis is geared towards reacting to the market's movement as soon as possible after it occurs. We are now using a combination of interpretive and mechanical methods. Why trade? First of all, we strongly believe that the buy and hold strategy of investing is dead. In order to profit in this market, we need to trade and not sit idle. Reasons why it is imperative to trade the stock market using our proven method as opposed to the buy and hold strategy can be understood in a few charts. We will discuss each of the following: historical chart of the Dow Jones Industrial Average, current secular bear market of the S&P 500 index, secular markets explained by price to earnings ratios of the S&P 500 index, and the simple price and moving average crossover technique applied to the S&P 500. The method we use for signal generation is more complex than those listed above. Let's look at these one by one. The first one is a historical chart of the Dow Jones Industrial Average covering the last 112 years. The dashed box areas are the periods of secular bear markets, and the unmarked areas represent the trading history of secular bull markets. Secular bear and bull markets can last between 10 to 20 years each. The market of today is in the secular bear market that began in year 2000. We are only 13 years into this zone, which should last a few more years. Looking at the current secular bear market of the S&P 500 index in greater detail in the 17-year chart shows many large percentage moves within a massive secular bear zone. We can break up these areas into bull cycles and bear cycles. There were 3 bull cycles and 2 bear cycles within this major zone. As of June 2013, the market is still in a bull cycle, but things can change soon. In this chart, secular bull and bear markets are shown as driven by trends in the price-to-earnings ratios of the S&P 500 index. The top portion of the chart is the S&P index, and in the lower window are PE ratios. The secular bull markets are shown in green, whereas the secular bear markets are shown in red. Looking at the lower window, notice that secular bull markets start within a trough at below average PEs, whereas secular bear markets start at the peak of above average PEs. This chart shows that just by using a simple price and moving average crossover technique applied to a bear cycle and a bull cycle of the S&P 500 will greatly outperform the buy and hold strategy of investing. As shown, the buy and hold strategy lost about 10% over a 4.5-year period. If people were trading their accounts using this method, when you add up the percentages for all the losing and winning trades during a bear cycle starting at the end of 2007 through the beginning of 2009, you would have made 45%. And adding all the losing and winning trades during the bull cycle of 2009 through 2011, one would have made 69%. Adding the trading returns for both the bear and bull cycles comes to a profit of 114%, whereas the buy and hold method for the same 4.5-year period was a loss of 10%. Our method is more complex than the simple crossover technique, but even this simple crossover technique shows a clear advantage over the buy and hold strategy of investing. Take some time to look over this chart. This brings us to our track record. I will show a comprehensive table of our track record with the results going back to the inception of our service, followed by a bar chart and a line chart. Now, let's look at our track record. The table shows 14 years of our real-time trading results. As of June 2013, our results have outperformed the buy and hold strategy of the market 10 of 14 years. We are not a perfect system, but we have always been profitable. The key point is that we have never had a negative year based on our trading methodology. If you focus on the collapses of the stock market in years 2000 to 2001 and 2008, we performed quite well since we were mostly shorting the market. Our worst year was in 2012, when we tried to convert our site to an asset under management site with 2 additional partners from March to September 2012. However, their input negatively impacted our results, and we dissolved this partnership. Since then, S&T is back 100% to a subscription-based site for everyone, and I am back to doing my own analysis. Members are once again very pleased with the results. All of our individual trades for Diamond, SPY, and QQQ are shown in the tables on our website. A bar chart of our returns versus buy and hold returns for each ETF shows our trading methodology has been performing quite well over the years. A line chart showing our returns versus buy and hold returns, starting with a hypothetical $100,000 in 2001, shows a member would have done quite well using our service. To become a member of our service, go to the URL stockmarkettiming.com/join.html or click on any join button on our website. Once you are on the join page, just click on the order button to our primary service, which is an ETF market timing service. After you have successfully signed up for membership, We will send you our confirmation response letter via email with your username and password for the members only page. Thank you for taking the time for watching this video presentation about stockmarkettiming.com. For more information or questions regarding our service, please visit the frequently asked questions page on our website or send me an email. We hope you decide to become a member of our service. This is Dr. Robert W. Dillon, President of stockmarkettiming.com.